as you know, between June the 1st and the end of November, we are actually in the tropical hurricane season. One thing that we have not explored, well, not very much, is the extent to which Jamaicans are insured. In other words, their houses and their property. To discuss this and, shed some light, we have Mr. Peter Levy, President of the Insurance Association of Jamaica, and he's also Managing Director of the British Caribbean Insurance Company. Mr. Levy, good morning, sir.
Good morning.
Yes, sir. The very first question I want to ask you, do Jamaicans take insuring their houses seriously?
I would say that the penetration of insurance is not as deep or as wide as we would like.
Yes.
Not just as sellers of insurance, but also in terms of the kind of protection that I think we would sorely need in the event of a catastrophe along the lines of what happened to several Caribbean islands last year.
Yes. Mr. Levy, what percentage of Jamaica's housing stock is insured?
The numbers that we have, I think there's a discrepancy between the official residential count includes individual apartments, for instance, whereas insurers of strata properties would count that as one risk. So
yes.
It's hard to tell what the exact number is, but I can tell you that one of the main measures that we use for insurance penetration is the premiums as a percentage of GDP. And Jamaica's figure is around 2.5%, below 2.5%, and you'd want that to be more above 5%. So what we can say is that the general insurance penetration in Jamaica is less than half of what we would like it to be.
And of those who are insured, what percentage of those are adequately covered?
The last significant catastrophic event that we had which was Ivan.
2004.
2004. The company I was with did a assessment of the impact of underinsurance, or the extent to which people were inadequately insured of those who had losses, and it was then on the order of something like 30%. Those who had coverage had only 70% of the coverage that they ought to have had.
Oh, I see what you mean. In other words, what they were actually doing is saying, well, maybe this year not now go happen.
I'm not sure if it's that conscious of a thing, but,
yes.
but especially at the time, in the kind of early 2000s, inflation rate was quite a lot higher than it was today. So
yes.
You'd set your insurance, and you'd manage your budget, and then 2 or 3 years' time, you'd find that the value of the home had a kind of run away without you realizing it.
Yes.
So hopefully with a lower inflation environment, that is less of an issue than it used to be, but I think the budgetary constraints are still very much present in people's lives.
Yes.
So that I don't know that they have caught up, with that gap that kind of was created over those years.
Yes. Let's talk in practical purposes now. Let's say I have a house for $25 million. I'm not near to any beaches or any any seaside or anything like that. I'm not on the lip of a hill. Let's say I'm somewhere in Lower Havendale. $20-30 million. What would it cost? What would be the premium to insure that house against hurricane, flood, and earthquakes, and stuff like that, the usual stuff?
Standard homeowners comprehensive would be something for $25 million of value would be something in the region of between about 150,000.
Okay, so if the house is say $25 million, I'd have to find $150,000 each year.
Yeah.
Okay. And that would adequately, in other words, if a hurricane comes and I lose my roof, I would get back 100% of the replacement cost of that roof.
With the exception of the fact that you would have to bear the first 2% of the sum insured would be yours.
Yes.
So you would have, I think it's $500,000, unless my math is off, bill to pay. But above that amount, the insurance would kick in up to the $25 million.
In other words, if the house is worth $25 million and an earthquake comes and flattens it, I will be entitled to 25 million minus 2%.
Right, so 24.5 million is what you'd get in your hand.
Right.
Plus, of course, there's also additional stuff like the policy generally will cover alternative accommodation for a period.
Okay.
So, you have to live somewhere. On the night that it happens and the house is uninhabitable. Right. You need to put your family somewhere.
Yes.
And the policy will kick in and help with those expenses.
Mm. What about renters? Renters know if the owners have no insurance, what can renters do?
The renters have a financial interest, not in the home, not in the building itself, but of course in the contents which they own. And renters can buy insurance to cover their household contents. Mm-hmm. So furniture, if your appliances belong to you, your clothing, all the personal effects, you can very easily buy insurance to cover that.
Have you ever thought of maybe devising a policy for renters whereby, during the hurricane season they can say, somehow insure the roof? Is that possible?
Well, legally, you have to have a financial interest in.
Yes, I think I know that. Yes.
In the property that you can't. If you don't have a financial interest in it, what you're doing is placing a bet. Yes. So that's not strictly insurance.
But isn't insurance a bet, sir?
It is a bet. It is a bet where you have to have downside.
Yes, that's what you mean.
The possibility of losing.
Yes. For the sake of listeners, I think we heard about the average clause right after Hurricane Gilbert, because Hurricane Gilbert did take off my entire roof, and I got total payback for it. And right after that, now the average clause clicked in. What exactly is the average clause?
The average clause just basically means that you are required to insure to full value or close to full value of the property, and if you don't, then the amount that you stand to recover in the event of a loss will get reduced. So essentially, if you have that $25 million house and you only insure it for 15, then you can't recover the same amount, even if the loss is below the 15. You can't recover a loss of $5 million in full.
Yes.
Which would be the same for. Let's say your neighbor insures for the full 25, so he pays almost twice as much premium as you.
Yes.
He's going to get his full $5 million claim, but it wouldn't be fair from that point of view for you to be in the same position as him, having paid half the premium.
Mm-hmm. I have a house. It is valued or assessed at $30 million, and I pay insurance only to say $15 million, which is half the cost. If I lose my roof, I'm only going to get half the cost of replacement for the roof.
Half, right.
I see what you mean.
That's correct. That's what it means.
Do people insuring in the heart of the hurricane season get a better rate, a worse rate, or the same as usual?
It does not. It doesn't impact the price that they pay, because generally, the policies are almost always for a year. So at some point, they fall into the hurricane season. Mm-hmm. So there's an assumption that we're going through a full hurricane season. If you start in March, then the hurricane season will be starting in 3 months. Yes. If you start in October or November, then the hurricane season will be coming back around again in 6 or 7 months.
I see.
So there's an assumption in the premium that this is one hurricane season worth of insurance that you're buying.
If a hurricane is 5 days away from Jamaica, and I am the owner of an insurance company, and people are coming into me in droves wanting to insure, I am probably going to want to lock my office.
We have a procedure for that.
Yes.
And we stop writing increases or new business when it's within 24 hours.
Oh, I see what you mean.
Of Jamaica. Up to that point, we're open for business. There's a lot of times when you get, the forecasters and the odd time, for instance, tends to err on the side of conservatism.
Right,
which is
right. It's not an exact science.
It's not an exact science, and so when you look at the cone, and there's a whole range.
The cone of possibility, yes. Mm-hmm.
And so it could pass below, it could pass above, it could go right through.
Mm-hmm.
We figure that's part of the uncertainty that we are in business to deal with, and so BCIC tries to stay open until the last possible minute. I should also say that for renewals, at all times we accept renewals, because if you're with us,
yes,
we don't
yes.
think that you should suffer because the timing of your policy, your policy might expire at midnight on the 27th of September, and a storm comes through on the 28th at 2 a.m. That shouldn't cost you.
I see what you mean.
So renewals can always continue without any problem, but increases in sum insured or new policies, once it's within 24 hours, we have to draw a line and say, we can't take it on.
Yes. Well, Mr. Levy, you have certainly covered a lot of the of the answers to questions I wanted to ask, and I'm certain that others have been informed by the conversation we had.
Right. Make sure your policy is enforced. Make sure your sum insured is adequate. If you don't have one, it really is not that hard to take it out. Don't let the premium frighten you too much, because many of the insurers will offer monthly premiums that make the burden a lot less. So I encourage everybody listening to double check the insurance that they have and to get it if you don't have it.
Mr. Peter Levy, I'd like to thank you very much for speaking with us on this matter. Mr. Levy, President of the Insurance Association of Jamaica and Managing Director, British Caribbean Insurance Company.